It's been another brutal day for the cryptocurrency markets and also the stock markets today. Things are starting to sell off. It looks like our recent rally over the last few days has failed. I did talk about the fact that I did not trust this rally a couple of days ago, and I thought this rally would eventually fail, and it seems that is what has happened over the last day. So we're going to jump into it. We're going to ask the question, has anything changed? Do my paths still remain as they were before? And where do we go from here? What are my expectations of a fast versus a slow recovery versus falling into a very nasty bear market? I'm going to break everything down on this video. So if that is something you're interested in, please do keep watching. Smash the like if you like the video, and let's jump into it. And we're going to get started with Bitcoin then. So we can see that Bitcoin has, if we look on the shorter time frames, we can see that I was actually targeting an area here on Bitcoin, which was around about the 90,000 level. So that was in here. We talked about this moving average resistance. We talked about this downsloping trend line. I was actually expecting a little bit more of a squeeze into this level just to get the market a little bit more bullish and start to front run what would have been a breakout only to come off. It looks like we haven't even been able to get there, and we've started to roll off now. Obviously, the stock markets have really rolled over today. We've got the Nasdaq down 3% today, S&P down 2.3%. So a pretty nasty day on the stock market. And I was thinking yesterday, something's got to give. Like we saw a bad day for stocks yesterday. Bitcoin finished in the green, and I thought, look, is crypto going to catch up today? And it has done. So where do I think we're going from here? Well, I still think this path likely plays out. I had been saying I'm expecting a move to retest the lows, probably going into early April. So this marker I've got on this chart is Monday, the 7th of April. I wouldn't be surprised if a low comes in around about the 7th of April. If I just actually stick on the moon phases, we've actually got a bare moon coming up. These usually fall about sort of 14 to 15 days away from each other. So our last bull moon or uh, full moon was 14 days ago on the 14th of March. So I'm expecting us to probably get a bare moon in a day or two. Usually this coincides with negative price action. It has happened on the last few occasions, at least to an extent. So I would be expecting prices to probably struggle to make another rally for at least the next couple of weeks whilst we have this bear moon. And obviously, this just adds weight to the bearish outlook for the next couple of weeks, probably going into early to mid April. So that's obviously not a good sign. I'm not saying this is the most reliable indicator in the world, but it has been relevant over the last few um, years, really. I was going to say the last few months, but it's really going back for the last couple of years since I've been making frequent videos. We've been looking at this and saying this does seem to have some weight, and obviously it has played out for the bulls with us getting this bounce. Things very oversold. Obviously, this low got wicked through, and then obviously we saw the bounce towards 90k, and things have started to roll over. So, look, I'm personally thinking that we do come down over the next couple of weeks in terms of so that's the short-term outlook. In terms of the long-term outlook, nothing's really changed. I think if you're a bull, you want to see this level around the mid 70s hold. You don't really want price going lower than that. I mean, this would be a successful back test of the previous all-time high, the all-time high from early last year, which was the post spot ETF pump. So you'd want to see that hold. And if we just go on to the weekly, you can see we have some major weekly support coming in. So this is going to be our 50-week moving average, which is around that level. So we've got very, very close to it. We haven't exactly tagged it yet, but I think we might do on the next push down. And you can see we wicked below it a couple of times last year in the summer. Ultimately, we held it as support. So that is going to be a big, big level of support. I think the concern here is that because we've come so close to it, obviously, if we do actually come below this wick, there will be liquidity there. So it could be we see a greater spike through. We might come all the way down to the low 70s, maybe even 70k. But as long as we actually hold the weekly close above that moving average, which is just above our most recent lows, around about 77,000. That will be good for me as a retest. Obviously, we did it in our last bull run where we pretty much topped out. I think a lot of metrics showed this was actually the cycle high. We came down, there was a first push down, and then we went for a secondary high, and we actually made a higher high. And obviously, this was the bull trap where, after closing consecutive weekly candles, new all-time high weekly candle closes, there was about sort of three of them in here. We then dumped down, and we were pretty much down for the next year, down only for the next year. So, look, I mean, I'm open to something like that happening again. I think the question is this a Bitcoin super cycle? Has Bitcoin now transcended across the finance sphere, and is it going to emerge as this sort of uncorrelated, this way to hedge your portfolio going forward, a little bit like a digital gold? And unfortunately, we have seen the correlation, pretty much a perfect positive correlation between Bitcoin and the S&P, albeit there is a day or two of lagging. It's very hard to say that or hard to see that if stocks do fall lower, Bitcoin won't fall lower as well. So at the moment, this is very speculative as a path. I think if you believe in Bitcoin, we're still in a bull market, and you think that Bitcoin can establish itself as this unique uncorrelated asset to any other asset class, then potentially we could see a path like this emerge, especially if the adoption narrative continues to grow over the next few months and we get more news and more information and more disclosures of big companies and bigger nation states actually adding Bitcoin to their reserves, then potentially this is possible. But I'm starting to think this is less and less likely. Obviously, the last video I did, or the last couple of videos I did, I've been talking about the fact that I do believe we are now in a bear market. And for that reason, just based on all the data in front of us, especially with what the stock market is doing, I'm actually favoring more this path playing out, more of this bearish path playing out, which would actually be a deeper move. So we would actually temporarily lose this 50-week moving average. This would break lower. I'm not saying we would close down here, but potentially we come all the way down into the 60s. We back test this as support. I think a lot of people, if we were to back test this diagonal as support and this 100-week moving average, and then we were to get a pump on, and we could really go for it on this pump. I do think there'll be a really strong recovery from these levels. Potentially we come all the way up, and we end up having this situation where we could make sort of like a secondary peak here, another high, which would look not too dissimilar to what we did here, where we had the first peak and then we had the second peak. Now, I'm not saying that this has to play out by the middle of May. I mean, all of this could be shifted back a bit, and it might be that this actually comes in August or September, a little bit later on in the summer. But really, the approach or the thesis remains that we would look to come down, and we would get this enormous bounce that would get everybody bullish again. And people would be saying, I'm sure at this point, that we're off to 150K, we're off to 200K, Bitcoin's so back. And obviously, this would coincide with stocks getting a big rally. And what would be the catalyst for this? Well, obviously, we have the tariff stuff coming out early next month on the 2nd of April. So potentially, we see a big de-risking into that. Potentially, we see some follow through. We see the market bottom out shortly after that tariff news, after these tariffs get implemented, because I do think that news is going to be pretty bad for the stock market. I know it's already been priced in, but I do think that the tariffs, people are underestimating the effect that these tariffs will have. It's going to cause complete carnage. In the short run, they're obviously being viewed as inflationary, bad for business. They're going to make things more expensive for people that buy, goods that are produced abroad in the US and vice versa. So that could have a dent on growth, absolutely. And obviously, the market is quickly trying to price tariffs in. We'll look at the stock market shortly. But I think when the bounce comes, we will get a big relief rally. And I think the danger is a lot of people will mistake this rally here, even if we don't go that high, potentially it's a lower high, potentially we come into, sort of 98,000, everyone's calling for 100K, and then that gets front run or something. But potentially we see this bounce here and everybody starts to then get very, very bullish. And as soon as we take out 90K again, I think people will say, right, that is our essentially our higher high. Obviously, our last high was a lower high at 88, 89,000. Okay, we pop above 90, say 95K, which is this area here. Okay, we're so back, we're going to the moon. And I think this could all be one big trap. And maybe it takes a few weeks to play out, like we saw back at the end of the last bull market. Maybe it sort of hangs around for sort of a month or so, close to the highs, as people get more and more and more bullish, expecting a breakout. Obviously, this would completely wreck the bears. Everybody that's been shorting on this way down would also get wiped out. And of course, seasonally, if this were to happen in the middle of the summer, people would expect, well, we're going to see this massive explosion. We're going to see this alt season come, likely in Q4. The market has to top at the end of 2025 because that's the 4-year cycle. It's going to go from, November 2022 being the low to November 2025. Obviously, in the past, we've seen the cycle top around about the same time. This was back in November of 2021. So everything sort of lines up. Everything looks to be playing out how people have expected to after this massive scare, after this massive shakeout, only for the floor to get pulled beneath everybody, and the rug to be pulled, and then we go lower, we come back down. Maybe initially we don't make a lower low here. Maybe people think, look, it's still bullish, it's still a higher low, and then at some point I think we just reject, and that's your bear market confirmation. Then when these lows get taken out, and yeah, I think we come a lot lower. I think we could come all the way down to around sort of this $30,000 level and sort of back test some of this accumulation down here. Obviously, we've got a lot of inefficiencies created from this move, which happened, which really started in 2023. So from 2 years ago, we could likely correct all of this and come back down to these levels. And obviously, that would be pretty brutal. I'm not saying we have to go that low. Potentially, we find some support at the 300-week moving average. I mean, come the end of this year, if we were to start dumping then potentially this moving average is going to be coming up close to around about 50K. So potentially we just sort of come in and we sort of fill in this zone up here, which will be between, call it sort of 45 and 70,000. And we just trade in this extended range for a long, long time, potentially all the way towards the end of 2026. And then we start to get going again in 2027. But yeah, I can also see the case for us coming down a lot lower and potentially going as low as 30,000. I mean, that as a drawdown from the current all-time high, you're looking at around about sort of 72%. And if we look at the drawdown in the last bear market, you can see we came all the way down to around about 77%. And then if we look at the drawdown before that, because obviously the drawdowns are getting diminished, just like the upside is getting diminished. But this one was around about sort of 84% or so. So when you look at it like that, obviously, when 84% and then we got 78, 77, maybe now it goes to 72, that would all sort of tie in with what we'd expected to do. We're also expecting a top to come in at some point this year. So I think that top could potentially be in already. Obviously, I've outlined my reasons why. I just think there is more pain to come in this market. And to be honest with you, it's really the fact that I think everything has just been front run. I feel like a lot of people have their targets here for this cycle. They have their targets set at everything happening how it's happened before, in terms of the top has to come in at the end of this year. The top for stocks and the top for crypto has to come in at the end of this year. What we've seen throughout this cycle is we have seen a front running throughout the start of the cycle when Bitcoin made a new all-time high prior to its halving. We've never seen that before. That was literally a front run of approximately 1 year from when we normally see the new all-time high for Bitcoin. And it could be that the ETFs have accelerated the bull market, have accelerated this bull run, we've essentially been ahead of schedule, and therefore actually we're going to go into the bear market ahead of schedule. But actually, some of the stuff I'll show you later in this video actually shows that we are right on schedule. This is not, if anything, we've been a little bit behind schedule in the peaks on the last few couple of bull markets, and this one is actually back on schedule. It's like if we look at where we topped out in 2013, so obviously everybody remembers late 2017, but if we go back to the cycle before, which was 2013, that was also November. We had this one in April. Okay, so it was in November as well. So I thought that one actually came in a little bit differently, but it didn't. But I will show you some data later on in this video to show you that this actually could be breaking. We could have this top in earlier this time around, and actually it would still line up with our 4-year cycle pretty much perfectly. So I think the main reason that I remain bearish is the fact that I can't foresee crypto rallying with the stock market in a bear market. It just doesn't make sense. It just doesn't work for me. And if we look here, if we look at what the stock market's doing, this is an absolute trend change from these previous corrections. We can see we have now broken this ascending trend line. This is on the S&P, and of course we are now starting to break down through some of those longer term moving averages. Some of our weekly moving averages were now below the 50 moving average. I mean, we briefly saw this here before an acceleration higher, but when we've seen this in the past, you can see we wick below it, and then we come below it, and then we get above it, and then the next time we go below it, we come down to the 100 week, and we interact with the 100 week in a similar way. We get below it, we pop above it. Everybody's like, we're so back. It's, why did I sell back in? And then we come back down again. And we actually do that. We actually do that on 2 occasions before getting down to the 200 week, where we eventually make our low. And if you look at from where we topped to when we eventually got back to the high and broke above that high, I mean, that was over 100 weeks. That's 105 bars. So you're talking about from January in 2022 to January in 2024. I mean, that's 2 years that the stock market was under its prior all-time high. And just to, I'm not trying to scare anybody. And by the way, I don't think it will take 2 years this time. I think things will be accelerated because we've got aggressive policy changes here, which are making obviously everything quicker. And back then, we were in a situation where interest rates were rising. Remember, now we're going to be soon in an environment where interest rates are falling. So, whilst interest rates and the stock market can fall together, usually after the first few months of rate cuts, we then start to see the stock market bottom out and resume its uptrend. So, I mean, to give you an idea, again, it's similar. This hasn't started in January, it's now starting in February. It started a month later. So can we now see things go into February of 2027? I mean, that's a pretty long time, right? That's a very long time. So could crypto also find its low towards the end of 2026, as many people thought it would, according to the 4-year cycle, and then start to bottom out? Do things bottom out? Do stocks bottom out in the middle of 2026? So can we kind of see this situation play out? And then potentially from there, we see, a more sort of gradual bottom process. And then it's towards the end of 2026 that we start to get going again. It's entirely possible that something like this could happen. And just think about the pain and think about the damage that would cause. And yeah, it would be a very, very slow, painful path. But we've seen something like this happen not too long ago. And potentially we follow that same path again. We come down. I mean, this will rise up. This will essentially, this 200-week moving average will come in, starting to support prices again. I'm trying to think if there's an example of where we went below that. But look, every few years, we did it in 2020. We connected as low as the 300 week, but we reconnected with that 200 week. So 2018, 2020, 2 years later, 2022. So we haven't reconnected since 2022. Maybe we're going to do it in 2025, 2026, 4 years later. Let's see. Let's see. I mean, I know in the past, we haven't always done it, but we did it in 2016 as well. So we did it 2016, 2018, 2020. So we've gone a few years now without reconnecting with the 200-week moving average. I think if we're going to do it over the next few years, it's probably going to happen now. It's probably going to happen, sooner rather than later. Whereas some people are thinking, actually, it will just drag on. We'll just keep going higher, and then it will come down in a year or two's time. But if you believe in what the new presidential administration are doing, then you would know that they want to get all of the bads out of this market early. They want to literally throw the kitchen sink at it. They want to completely tank the market to get rates down, to get yields down, and to force a policy shift by the Federal Reserve. They know they need to have the Federal Reserve on their side to really get the best growth conditions. They need rates on the floor. They need QE to really get the market going parabolic and up only, which I'm sure is what they want. And that's only going to happen if something breaks. So I've been saying that to kind of get that up only environment, you need things to break first. So, why be all in when things are about to break? Why not wait until things are broken? And then when they get the bazookas out, you pile into the markets and you ride this thing right back to the upside from a much, much lower price, because I do think lower prices are coming. And like I say on Bitcoin, potentially after this flush, we get a really big rally in stocks. And again, this traps people. But this rally ultimately fails and we come back off. And like I say, we could be coming off throughout the rest of this year. We might get a pump into year end. We could come back off early next year. And then early next year, we put in a low for next year. And then we start to build and then we start to grow. And whilst the stock market is building and it's chopping, crypto essentially dies out and Bitcoin continues to drift next year. And then when the stock markets get back to all-time highs, we can see crypto starting to come back to life, starting to turn around as we see risk taking coming back into the market. And potentially this will coincide with something like tax cuts. We know that Donald Trump has talked about making tax cuts on these markets. So look, this is what I'm honestly thinking is the most likely path here. I'm thinking some sort of path that takes us lower throughout this year and maybe into next year, coming back down, possibly reconnecting with these highs from early 2022, possibly reconnecting with the 200-week moving average on the S&P. Obviously, the Nasdaq, I would think, would follow something similar, potentially coming down. Like I say, I've got three targets here. Any one of these targets, I could see a big bounce from. I think it makes sense to buy these targets, these longer term fib levels, these longer term weekly moving averages, because you will get enormous bounces from these levels. Like I say, you might even pump back towards this broken trend line in a couple of months' time, which then could take the Nasdaq back up to 21, 22,000, only to then come off into the end of the year. So those are things I'm currently looking at. And obviously I'm trying to look at how all of this sort of ties into crypto as well. And I think if the S&P follows a path like this, then it is likely that we will see Bitcoin follow a similar path lower. And I'm trying to see, is it on this one? Yeah, I think we'll see Bitcoin also break down and likely go lower. And like I say, I'm not saying it has to go this low. It could be that Bitcoin comes down to 50 or 40, but we know that these markets like to go a lot lower than people expect. Maybe we'll have some sort of news catalyst around this drop, such as, Michael Saylor gets into trouble, is forced to sell some of his Bitcoin. You can look at potential risk triggers here and potential things that could be catalysts for this. Black swans, should we say? It's always possible. There could be FUD around quantum computers. There could be FUD around the energy use of Bitcoin. We've heard all that before. Potentially, China goes and bans Bitcoin yet again. There could be anything, any sort of narrative that drives this. And I think what we're seeing right now is with these tariffs, you have this fear narrative that the media can really, really push out there to the masses. And it's like, this is why you should be worried. This is terrifying. Tariffs, they're the worst thing in the world. They're going to destroy everything. And it's this, and I'm not saying I believe in any of that myself. I actually think in the long run, these can be very, very good and beneficial. And they could bring about a lot of jobs back to America. I'm sure eventually these countries will work them out, and over time they will come down and they will come lower. So there's pros and cons to them for sure. And obviously, one of the pros is look, if these tariffs work and the US raises a lot of revenue from tariffs, then there's going to be these massive tax cuts. I mean, Donald Trump, I think it's Howard Lutnick has gone on record, who's Trump's economic advisor, one of Trump's economic advisors, saying Donald Trump doesn't want anybody over, I think it's 100 or 120 or $130,000 to pay any taxes. So, that would be absolutely huge. So I believe in the plan, and I believe that come 2027 and 2028 into Trump's sort of later years, that the stock market will be much, much higher. Potentially, we're up at 7,000, 8,000 by the time Donald Trump leaves office, which, is massive. But I just think in the short term, you need to be cautious. It's going to, make a lot of sense to be very, very careful here and just protect capital. Because do you really want to buy a market at five and a halves when you can potentially buy at fives? I know stocks are less volatile than crypto, but if we do get down to my lowest target, it's another 12, 13% drop. And that's going to be a big drop on certain individual stocks. And like I say, with Bitcoin, that's going to correspond to, like I say, Bitcoin is a lot more volatile. You could be buying Bitcoin potentially, I'm not saying you will, but potentially for half the current price. So I think it makes sense to be cautious here. And I don't see this market going higher anytime soon. Okay. So let's just look at a couple of things on Twitter because there's some really, really interesting information on here. And then we'll wrap up the video. So we're going to start with obviously our favorite crypto Twitter account. We've got, our favorite moon boy here, Mr. Crypto. And again, this account is just pumping out daily hopium, daily ETH is about to shock the bears. The thing that gets me is here, okay, he's drawing a parallel channel. We've got two touch points to the upside. Unless I'm going blind, we've only got one touch point to the downside. So you would probably say for this to be valid, you'd want to see another touch point to the downside. So where is this downside coming in? Let's have a closer look here. Because because I don't know if obviously this low is breaking below this low here. The 2025 lows are breaking below the 2026 lows, and potentially we then got channel support coming in. This is around about $600, right? This it's between that looks like 555 and 695. So potentially you've got Ethereum coming all the way down to around 500, $600 based on this person's own analysis. So I'm not saying that this has to happen, but it is one scenario. It is one possibility. A lot of people are saying ETH to 1,500. A lot of people are saying ETH to 1,200, $1,000 to get front run. What if it overshoots $1,000? What if it takes out these lows and comes really all the way down? I mean, where's this 2018 high? This, I think, was around sort of $600, $700. So maybe it backtests that. I'm just trying to say This guy, like he's sharing stuff. Obviously, as we know, this consolidation can go one of two ways. It could go to the bullish target, but based on his channel, the bearish target would be down here. So just be really, really careful. I mean, I know these guys want to convince you that things can only go up, but they really, really can't. Bears are loud, but almost always wrong. Well, we'll see about that. I don't think I've been wrong with the calls that I've made over the last couple of months, telling people to take caution, go to cash, because ever since I've got bearish, things have gone down. Markets go up and to the right. The stock market goes up and to the right. No crypto chart goes up and to the right. Crypto charts go to the right and down, 99% of them. So he's not been honest with you. No serious top indicators of flash yet. Well, that's subjective. Obviously, we can all look at different indicators and don't get shaken out of here. I mean, this is the message you're going to find from 99% of crypto Twitter and 90% of YouTube channels right now is that just don't get shaken out. You're selling at the worst time. We're about to go up only. Last chance to get your ticket to the moon, to change your life, to be rich beyond your wildest dreams. You've really got to try and resist it because it's just going to get you in a lot of trouble. So on to the more serious analysis. So this is shared by a guy. His handle is at Tony the Bull BTC. It's quite interesting because he's actually shifted being bearish. But I really think these charts hold a lot of weight. Here you've got the cycles. So this is the 4-year cycles, and he's basically looked at the peak point of maximum financial risk. Okay. And then he's looked at the trough, the point of financial opportunity. So you really want to be selling on these pink areas and you want to be buying these green areas. And, if you've done that in this cycle, it would have worked out very well. Obviously, you would have got out a little bit too early if you'd done that on the 2017 run, because ultimately we topped later on the year, but it would have got you back in pretty much at the perfect point in the bear market. Again, here, it would have got you out on the first peak. Obviously, we talked about the fact that there was a secondary peak, but a lot of the metrics and data and warning signs were all starting to flash on that first peak. That's when we had things like the pi cycle top. That's when a lot of indicators were saying to get out the market. And obviously we had things like, I think this is the stochastic indicator, which is telling you that it's starting to lose momentum. Obviously we got a lower high here and then things came out. And then we had that secondary high, obviously, which took us a bit higher. But this for me was really the top. It was around early 2021. Again, got you in pretty much right at the lows in the trough. And then we have just seen the peak of the point of maximum financial risk. And look, we can see that the stochastics are starting to lose momentum, are starting to turn down. And we can see this arch is now starting to slope down. So these are the decline phases. So I'm looking at this and really just looking at this alone, it's pretty conclusive here that we are likely from now, and I don't know the path to getting there. I don't know if we're going to come back up and make a final high like we did here, or whether we're just going to make a lower high, or whether we're just going to steadily drift lower. But really, you don't want to be that much interested in buying this market until at least the middle of 2026. It's pretty much got this low here at July 2026. That's why I think the middle of next year we could go into a 1-year bear market here, and we would be completely in line with the cycle analysis. And obviously shared a few charts like this here. We can click through a few of these. So very, very similar charts here with the peaks and the troughs. I think all of these are pretty similar. This one shows the MACD. So we can see we've now got some divergence on the MACD. We've got less buying. We actually went negative last time around on the MACD. So that was a really even clearer indication that the cycle high came in beforehand. And like I say, over the next few months, we will expect this to go into the red, and we will expect this probably to bottom out at this trough, okay? And then this final one is the RSI. So we can see the RSI, when it closes back below this 70 level, so when it did it here, here, okay, this one was a little bit off because we still ran on a bit higher. Actually, no, that was there. We did it here, we did it here. Obviously, we did get the secondary high up to that level. And then we've done it here. This has really been the start of the bear market. So what this tells me is we might come back up to the 70 level with one more push to the upside. But eventually, I mean, eventually this is going to come down. This is going to come lower into this trough, which is going to be in the middle of 2026. So you have to be really, really careful putting serious capital to work in this market at these levels. And this is from Larry Thompson, who's a CMT. So this is a chartered market technician. And his handle is Hostile Charts. And he's looking at the S&P inverse. So what he's saying is obviously an inverted chart. And would you be bullish on this chart? Well, it's recaptured the 50-day. It's come up to the 200-day. It's basically broke through it. It's come back down for a retest, and now it's bouncing again. So, this does look like a bullish chart. And because this is the inverse S&P 500, that actually makes the S&P 500 bearish. So obviously it's interesting to see that analysis from, shall we say, more traditional, chartered market technicians. I believe they're both are chartered market technicians. So these are the experts when it comes to charting. It's not your Mr. Cryptos or your Max BTCs or your Ash Cryptos that are the charting experts. It's these guys, and the smart guys, the experts are actually saying that no, there's warning signs here. There are serious downside risks, and like I say, just zooming in on the daily here and looking at that daily price action, we popped above the 200-day moving average. People started to get excited. We're now rejecting that. We're starting to come off. So really, you'd expect to see price likely, if we've lost this moving average, come back down to the 300-day. And like I say, do we bounce? Do we hold this low? Do we flush this low? Or do we actually come significantly lower than this low and lose this 70 level? And like I say, that would be a real sign of weakness of this bull market. I'm not saying we won't get a big pump back up towards 90 to 100,000. But for me, if you're still long this market, that is your opportunity to just get out of everything in anticipation of what may well happen. And like I say, just to finish off and recap on Bitcoin, well, this is the hopium. The hopium is you manage to get a really quick sweep of this low. You hold 75,000, absolute lowest low 70s. I wouldn't want to see us going below 72. Um, and you start to get some consolidation, and the market just gets really boring for a while. And potentially you can see one more high going into the end of next year then, because this gives the opportunity for the market to reset over time as opposed to overprice. And but obviously for this to happen, we don't we either need to see a decoupling from the stock market, or potentially I'm completely wrong about the stock market, and actually the stock market doesn't go lower. We don't come all the way down here, and actually maybe we bottom here, and then we start to see something like this play out where we're back to the highs again, and even then we could get something like that happening. So yeah, we could get this big bounce. We could get this big bounce later on this year. Maybe we get the big bounce, earlier on this year. I think at some point there will be this trap that gets played, and then at that point we can see, a further sell-off, a deeper sell-off, potentially a longer sell-off happening in these markets. And one of the really concerning things is what's happening with the altcoins as well. We've got Ethereum, which is breaking down again today. So people started to get excited a few days ago. We got back above 2,000, and obviously today we've crashed back below 2,000. Really, for this to be seen as some sort of deviation under this level, we would need to see a recapture of like 2,200 before the end of the month. Obviously, we got the monthly close coming up in a few days. We need to get back above this 2,159 by the end of the month for this to just be a shakeout. And it looks very, very unlikely that that's going to happen. And like I say, I do think, I mean, these lines have been drawn in here for a while now in terms of coming down to these lower levels, in terms of coming down to potentially 15 to 1600. And if that breaks, like I say, there's your six, 700 from your Mr. Crypto long term accumulation, long term channel. I mean, I'm not calling for this to happen, but if we are going into a bear market, if Bitcoin is going to see a potentially a 50% drop from current prices, then if Ethereum sees a drop of 50% from current prices, then we are going down to 1,000 and just below. So is it possible that we actually come to the bottom of Mr. Crypto's channel? It is. It really, really is. So yeah, I mean, kudos to him for sharing that channel, even though he didn't, in my opinion, interpret it the right way. And of course, that would spell disaster for Solana as well. Solana would likely come down to $60, $70 in that sort of bear market scenario. That would, I mean, a 50% drop would take us, yeah, down to the low 60s. So I'm not saying that happens right away. I do think we could sweep these lows and see a decent bounce, and then it becomes decision time. Obviously, I've still got the bullish pass on, expecting the rest of this year to be bullish, but that is looking less and less likely. So I will probably redraw these paths on the next video when I spend a bit more time looking at alts as well as Bitcoin. I think this video has probably gone on long enough. Obviously, we have talked quite a lot about the different paths and what I'm expecting. We've looked at the stock markets. I've talked about why I'm concerned. We've looked at what I believe to be very good analysis from a few CMTs on X, and yeah, there's a lot that's going into my thinking right now, my thoughts about this market. But I do think the cycle high is likely in. I'm leaning towards that. I think it's over 50% that we've seen a cycle high for this bull market. And for that reason, I'm not interested in investing serious capital into this market here. I'm in stables and I'm in cash. I've still got about 15 to 20% of my portfolio in Bitcoin just because I'm still a long-term believer. I probably, if we do see this pump towards 100K after the next leg down, that would be a point that I de-risk some more of that Bitcoin. Maybe I just hold something like a 10% position. I'm currently short the Nasdaq 100. I'm short the S&P 250. I'm sorry, S&P 500. Look, I'm really, really not confident in this market. I mean, the shorts on the S&P 500 and the Nasdaq 100, those are hedges. So I do have some stocks. I'm holding a bit of Tesla. I'm holding little bits of things like Nvidia, Google, Amazon. So, rather than just rush out and sell those at the lows, I'm going to be working on hedges. I added these hedges at the highs yesterday, so I'm going to run those for a bit. So I'm just doing my best right now to protect capital. For me, this is not the environment to be taking major risks on. And look, I think this market has been called really well over the last few sort of weeks and months on this channel. I don't really see any other channels that have been calling the market better. I know I'm a smaller YouTuber, but going forward, we are going to be coming up with a sort of group product, a Discord where it's going to be myself. You're going to have literally daily running commentary on the markets from me. I'm going to be sharing my trades, what I'm buying, where I'm buying, any hedge positions, any short positions, long positions. Obviously, what is my portfolio going forward? And really, this is just going to be a community to help improve people. If people are new to trading, to give them some sort of guidance, because it's very hard out there. Right now, these markets are some of the hardest I've seen. I've been in the markets a long, long time, 17 years I've traded, and I don't remember seeing things well, I have seen things like this before. I have traded bear markets before, but I don't remember seeing so many people so confused over what's happening. And in my opinion, people just looking at the wrong things and reading things the wrong way. And it's good to know that I feel I have been reading things the right way. So I think there's a lot of value to be had there in terms of sharing what I'm looking at. There'll be things like institutional research. I'm subscribed to things like institutional sort of hedge fund quality research, which I can, share with people. And then there'll be things like altcoin requests. There'll be like opportunities to ask me questions like an AMA, Q&A, all this kind of good stuff. So look out for that. That's kind of like a project that's very much work in progress at the moment, but we should be ready to launch over the next, I'd say over the next month, 1 to 2 months. So that will be coming your way soon. And yeah, obviously I'll be back, like I say, a few times a week. It's obviously not the best conditions to be making crypto content or crypto videos right now. So, like I say, I'm trying to do a little bit more on the macro side in terms of tying in the stock markets and the macro picture to keep everybody well informed in terms of what's going on. But like I say, this is my most likely scenario path at the moment. Obviously, last year the paths were pretty good on the channel. We managed to catch this really well. We also caught, this down move following the breakdown of the 90, sort of 92, 93K level quite well. So look, we're gonna be with you. I'm gonna keep on sharing sort of my best thoughts and my opinions and research on this market. And yeah, hopefully if you find some value in this, in what I believe is a very, very honest take, a very unbiased take on the markets, then consider subscribing, consider dropping a comment of support and help support the channel. Obviously, I'm trying to get this growing. I think I've got a good message to share. I think I just want to try and help as many people as I can, and obviously, the more interaction I get, the more this video is going to get out there, and I'm going to be able to help people and hopefully stop people losing their money, and hopefully, when the conditions are better again, help people make a lot of money. So, yeah, that's all I wanted to say. So, thank you very much for watching. If you watched all the way to the end, I really appreciate that. And yeah, I'll be back very, very soon on the next one. Have a fantastic evening, fantastic weekend, and I'll talk to you again soon.